We'll never face this level of uncertainty that we are facing right now. We haven't had a slowdown in the economy since like the one we experienced with the COVID, starting with the COVID crisis, for a very long time. The financial needs are increasing. 60% of the low-income countries are at risk of debt distress. We are seeing that a country are now having spread which are not sustainable. Actually, 12 of the country or lower country have a spread which are considered as distress stress, and 20 of them have spread above the 700 basis point. So we have a situation which is quite difficult for a lot of countries. For that reason, we need to step up all together to be able to respond to this. And the international financial architecture, including MDBs and the World Bank, needs to step up to that and to be able to help responding to it. In addition to it, you have the situation of global public goods. We have climate change challenges, which are making even more urgent to address these challenges, and that will require a lot of resources. These resources are not available in our institution if we do things the same way we are doing them, and they are not also, but they are available on the capital market. There are a lot of resources available out there. So the main objective is how we can leverage our balance sheet, how we can mobilize more of the resources out there to be able to address those challenges.
And is there a two-pronged approach to that? So on one hand, the whole lending framework may need to be reconsidered, but at the same time, there are capital increase demands also.
The discussion is about, first, how we can leverage better what we are doing. It's important to ensure that our AAA rating is kept. That's central to anything that we can do as Bretton Woods institution and development bank. So there is a consensus on that we need to make sure that our AAA rating is protected. Within that framework, there are possibilities which are looked at to be able to leverage more our balance sheet and to have to better leverage it. So that's one part of the conversation. So in addition, we would like to have a much higher ratio of capital mobilization. We are at IFC the leading agency in terms of capital mobilization, but we want to do more. We want to do more, and we see the potential. And how can we do more of it? We can do more of it by helping de-risking some of the investment, blended finance. All the conversation is around that. We are talking about warehousing some of the investments that are existing. We are talking about different things that will help us to mobilize more resources. But also we need to generate more projects in places which are remote, where the capital market doesn't know very well. And that's something that IFC is very placed in doing, and we will be doing more. So we need to have two increases. We need to increase our leverage on what we are doing internally, increase our own account, in our jargon, that's what you call it, lending, but also to significantly increase the level of mobilization. And for that, we need to use platform, we need to have more blended finance to be able to de-risk investment.
You mentioned the word resources, and in this case, resources are actually finite. What do you make of the concern articulated by some lower income countries that the focus on the rest of the world right now on climate change priorities, on green transition, is coming at the expense of focusing on sustainable development goals and tackling poverty? Is there a trade-off between the two because the resources are finite?
We should avoid it to be a trade-off. And we have many directions to avoid it being a trade-off. One of them is to invest a lot in adaptation. In fact, when you think about adaptation, is to ensure that we are using less water when we are doing agriculture. We are protecting coast in developing countries, and we are doing a lot of things which are linked to efficiency in the use of resources. That will help in fighting climate change, but at the same time, will make the farmer in the Sahel much more productive and to have a much more resilient agriculture. But it's not only about adaptation, it's also, we know that when there are extreme shock in a country which are related to climate, those who are suffering the most are the poorest. When you have a bridge which is broken because of a flood, when you have a drought in a country, this is the poorest are the ones who are more affected. When you have more polluted air and you have people who have much more diseases related to pollution, this affects more the poor. So when we fight climate change, we in fact help fighting poverty.
We're obviously here, and one of the major topics is that of rising interest rates and the impact that has had on financial stability. And one of the areas that has come up is debt sustainability, again, in some of the developing nations, in an environment where interest rates have gone up. A lot of that debt is coming due in the next couple of years. How big of a risk factor is that to your mind?
That's one of the main risks that we are facing in the short run, because not only we have a high level of debt, but the maturity of that debt is not very long for a lot of countries. And that's actually something that we raised a decade ago when we saw a rapid rise in the indebtedness level of low-income countries. We warned them by saying them that the condition at which this debt might be paid and refinanced in the future might be a worse condition and will affect the sustainability of the economy. A lot of bullet payment, as we call them, occurred 8 years after the loan were made. And we need to address that situation. So there are different things that were done. The common framework was something that we put in place, because today the institutions that were set to address the sustainability of the debt are not necessarily reflecting the borrowers. In fact, a lot of the important borrowers are not in the Paris Club, which was an important institution to address it. So we need to think about how to bring those lenders which are not part of the Paris Club, or at the time the London Club, which is a conversation and find. So the common framework was part of it. Secondly, we need to ensure that growth is there, because without growth you will not be able to sustain. Third, we need to look at the currency mismatch. A lot of the debt was in dollar when a country are generating their income in local currency. So deepening the capital market will be very important for countries to be able to offset some of this long-term risk.
Hi, I'm Joumanna Bercetche, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.